Hello to all you debt warriors out there, and welcome back to another episode of Millennial Debt Domination. I'm your host, Katie Vada. Having and properly using credit is a tool that's essential if you ever want to make a big purchase. If you have a credit card and you're paying off the balance at the end of the month, that will positively impact your credit score. Having excellent credit is important for everyone, but especially younger adults such as millennials who are looking to make life-changing big purchases in the near future. On today's episode, I'll be tackling your credit score and why you need to maintain a high score. I'll be joined by Rod Griffin from Experian. Experian is one of the 3 credit reporting bureaus where you can find your credit score. Rod is the Senior Director of Consumer Education at Experian and has extensive knowledge on credit and credit scores. Rod and I will discuss why credit is important, why less and less millennials are using credit cards, and ways you can establish credit aside from using a credit card. Now, let's get to my chat with Rod. Hi, Rod. Thanks for being on the podcast today.
Hi, Katie. Glad to be here. Thanks for inviting me.
Yeah, so this episode, I kind of wanted to talk about credit and credit score just to kind of inform the millennials and Gen Zers more about that topic. So I thought we could just start off by saying, I'll ask you, what is a credit score and how are they exactly calculated?
Yeah, so a credit score is a tool that's used by lenders and other businesses to help predict the risk of doing business with you. So if it's a lender, they use a credit score to help them predict that you'll repay a loan as agreed. Pretty simple. The way I describe it is if you think of being in school, when you write a paper, that's like the credit report. So you're using credit, deciding how you're going to repay the bills and those sorts of things, how much debt you're going to take on. You control that content, kind of like writing the paper. Mm-hmm. The teachers, like the bank, they get your paper when you've completed it, and the teacher assigns a grade that reflects the quality of the work in the paper. A lender uses a credit score to assess the quality of the information in a credit report. Mm-hmm. So they're 2 different things. And a score is just a tool that's used to analyze the information that's in the credit report.
Okay. Yes. So now that we kind of know what the credit score is, so there are 3 major credit reporting bureaus: Equifax, Experian, and TransUnion. So can you explain a little bit more about what these bureaus do?
Sure. The credit reporting companies are credit bureaus. Sometimes you hear them called credit reporting agencies. Mm-hmm. Although we are not government agencies, we're private businesses. Okay. We collect information about how you repay the debts you owe. So a credit report is all about your debts. And it's from lenders. It's from, could be mortgage lenders, auto lenders, credit cards. We collect that information from your lenders about how you repay those debts. So what kind of accounts do you have? How long have they been open? Mm-hmm. Are all of the payments on time? Mm-hmm. And so on. We also have identifying information because we need to know who you are. And there are actually more than 220 million people with credit reports. Wow. And believe it or not, someone else will have your name. There are other Rod Griffins out there too.
Yeah, exactly.
And some of those Rod Griffins aren't so nice. So it's important that our credit's not as good. So we need, your name, your address, social security number, date of birth, previous addresses, any name variations that are reported to us would be in that report. And then you would find something called inquiries, which are simply a record that someone's looked at your report. And the credit report, again, it's just a history. It's a credit history of how you manage the debts you owe. And that helps give insight to potential new lenders who want to give you a loan and want to know that you'll repay them as agreed under the terms of their contract. And so that's what we do. We collect information and store it in a format that can be checked out by businesses and lenders to help them make decisions. And they have to meet something called permissible purposes under federal law. So that's like their library card. So if you think of a library that collects books and stores them, you can buy the millions on shelves and in using the Dewey Decimal System. I think they still use that. I don't know. Mm-hmm. But that gives them a means to check out the information if you have a library card. Credit bureaus are kind of that way with information. We collect and store information and compile it into a format that can be used to help make risk decisions and check it out if the business has a permissible purpose under the law.
No, that's a good analogy to use, especially for, people my age who might not understand kind of what exactly a credit bureau is.
So and although unless you're going to college or school, I guess you don't see a library much anymore either. Everything's on a pad or a mobile device.
Oh, yeah, there are still some, but especially, Gen Z-ers in college spend a lot of time at the library. So, but after that, maybe not so much. Yeah. So I know Experian is one of the three major credit bureaus, and you're the senior director of consumer education and advocacy there. So what are some credit services Experian offers that people can take advantage of?
Sure. And I guess with regard to my title, my job is to help educate people about what we do. So I have the best job at the company and people understand what we do. And so you think about services, we have live broadcasts 4 days a week on Periscope, on Twitter, on Facebook Live, on Crowdcast. So if people want to join us and have questions, our goal is to share. That's what my team wants to do. And you can learn more about those at ex.pn/credit chat and ex.pn/credit chat live.
Yeah. I'll put all that information in the podcast notes too for everyone.
Yeah, because we love to talk. We love to hear from people. But from a business perspective, we provide a number of services. One, the credit report itself. You can get your credit report right now once a week at annualcreditreport.com to check your report. And we put that service in place because of COVID-19 and the need to make sure that as things were and are evolving very rapidly, you can see what's in that report, keep track of it. So you get a free report. We offer monitoring services, of course, so you can enroll for free, and we will send you alerts, give you a free report once a month, give you free FICO 8 scores, so you know what's happening with your report and can help you manage that credit history. We also offer something called Experian Boost if you're trying to build credit. Experian Boost lets you give us permission to add your positive cell phone payments, your positive utility payments, so things like natural gas, water, electricity, to your credit report to help boost your credit scores. And to do that, you give us permission to go to your bank account once a month, capture those payments and pull them in as individual accounts. And it's positive information. It's the reason we do that, and people often ask, well, why do I need to do that? And the reason is because utility companies, cell phone companies have not historically reported positive information. Yeah. So if you're paying your payments on time, they aren't telling us that. If you miss a payment or you go to collections, they'll tell us that. So you would see the negative. And our research showed that people who are paying their cell phones on time, paying their utilities on time, are probably good credit risks if everything else that's available says they are as well. And what's proving out is that people with what we call thin credit files with fewer than 5 accounts, which for Gen X and millennial, or pardon me, that's me, Gen Z and millennials, who have short credit histories, can often be disadvantaged because they just don't have access to information. Exactly. So having those payments added can help boost their credit scores. So Experian Boost is a fairly new tool, been out about a year. We have rent reporting. So if you're renting, you can talk to your landlord. They can report your positive rent payments. That can help improve your credit report and credit scores as well. So those are, sort of the things people don't know about or don't think about. Otherwise, it's the same kinds of things. If you are making payments on a loan or a credit card, you're going to see those in your credit report. You'll be able to get the report. You'll be able to know exactly what's there.
Yeah. Yeah, because a lot of people, millennials especially, don't have a lot of credit to start with. So credit cards are a great way to start with building and establishing your credit. But only 23% of millennials have one credit card, and only 6% of millennials have 2 or more. So why do you think less and less millennials are using credit?
And we're seeing that shift a bit. And millennials were more reticent, more reluctant to take on credit. We think because they went through the Great Recession and saw what was happening with their parents. When the mortgage crisis hit and the economy tanked, a decade ago, they saw the financial challenges caused by too much debt. And as they became adults, they were reluctant to take on credit cards and other forms of debt. And so we didn't see millennials opening accounts like we did previous generations. That's changing to some extent. I think as millennials have become older and that millennial band is fairly large, millennials are in some cases closer to 40 than 30.
They're almost 40. The oldest are like 39. I'm the youngest. I'm 25. So it's pretty big gap.
Yeah, it is. And so we see differences within that gap. Younger millennials still are less active in taking on credit. Older millennials, as they've gone to college, they've gotten out into the workforce, they've started to have families, they've started to take on more credit. So we're seeing more credit card use, we're seeing more mortgage loans, we're seeing more student loans, obviously, we're seeing more personal loans, those sorts of things. And I think some of it is just life, and you kind of see those patterns in previous generations as well. But there are changes in sort of societal norms as also. So if you think about previous generations getting into the workforce, starting to have families in their early 20s.
Yes.
Now millennials are waiting longer, so they're not starting families until they're in their early 30s in many cases. So that's when they start to buy houses. That's when they start to have kids. And when you start to have kids, you start to need credit because kids are expensive. I don't know if you have any.
No. I'm part of that generation where it's like, maybe in 10 years. Yeah. Maybe never.
I have 7 grandkids now.
Oh my gosh.
3 stepdaughters. So kids are worth every penny, but they are ridiculously expensive sometimes. And so you use credit. And so we're seeing that, I think, with the older millennials are more active in credit. The younger millennials are less so. And I think it's just in part because of what happened in their youth and made them more reluctant to take on debt.
Oh, yeah. I think that is a good point because so many millennials are starting families later or maybe not even at all. So they feel I don't need credit, but you do. But I guess we're not thinking about that as much as our parents were at our age.
Yeah. Yeah. And it's, you need credit, but you don't need debt. And that's
I think that's what we think about. Yeah. Because we already think about how much debt we have with our student loans. Why would we want to add more to it?
Yeah.
But in the long run, the millennials will be affected by not using and establishing, a credit score. So how do you think we'll be affected later in life if we don't establish a credit score in our late 20s or even early 30s? If we still don't have an established credit score, how will that affect us?
Well, having established credit is really important in a lot of life. And I always say credit's a financial tool, debt's a financial problem, and they're two different things. They're very closely related, obviously, but they're two different things. Having credit doesn't mean you have to carry debt. Right. So if you think about having a credit card, if you make a small purchase once a month, twice a month, and turn around and pay the balance in full, you're not carrying any debt, but you are building a positive credit history. And that positive credit history is going to be important for a number of reasons. When you apply for a new job, an employer might look at that credit report, a limited version of it. If you're applying for a job, for example, that is managing a company's money, you're going to be an accountant, for example, or managing that business's cash. They may look at your credit report. Or you're applying for a job where you are handling dangerous chemicals, which I'm in Texas and I'm in the Dallas area, but in Houston, they have chemical plants. Those chemical plants will use a credit report to verify the person's identity that they provide on the application, not because of financial issues, but because of security issues. They want to make sure that it's a matter of the person being who they say they are, that they're protecting against employment fraud. So having credit established, people don't think about it in those terms. Now, Employers never get credit scores. I have to stress that. That's a common myth, but they get a limited version of your credit report. More commonly, if you are applying for an apartment, the apartment management company is going to look at your credit report as part of their tenant screening process. Having a good credit report could reduce your security deposit requirements, for example. If you're getting a cell phone, which we all carry smartphones now, I know one person who's about 80 who carries a flip phone. I don't know why. But otherwise we have smartphones, and they're not cheap, and they will check your credit report, and that will determine to some extent how much you have to pay for that phone, or at least the down payment, or how much you're going to pay a month for that phone. Do you qualify for the best terms? It's going to affect your ability to get things like mortgages or auto loans at better terms and better rates. So it's really an important financial tool if you're using it well, because it can save you money. And that's really what I try to encourage people to think of it as, not as a tool, or not as a record of the debt you owe, but rather as a financial tool to help you be more financially successful.
Mm-hmm. Yeah. So your credit report at the end of the day it's a record of your credit history. So how often should we be checking our credit reports, and what's the importance of checking?
Mm-hmm. You should check your credit report at a minimum of once a year, and that again is a minimum. If you are planning to apply for credit, I always advise you check the report at least 3 to 6 months in advance.
Mm-hmm.
If you've had issues with fraud or you're working to improve your credit scores, maybe more often. If you're going through what we're going through now with COVID-19,
Yeah.
you think about people putting accounts in forbearance and other payment accommodations. It may make sense to check your report more often, at least once a month, maybe even every week or two, just to be sure the accounts are reported with the right status, to make sure there's no signs of fraud, or identity theft, to make sure that information is being reported correctly, to make sure that if you've opened new accounts that they're being reported. So a lot of reasons to make sure that you're checking that report, knowing it's there. They're very accurate, so you rarely do people find, on the whole, any significant errors in terms of the account information that's reported. But we're not perfect, and so making sure you check that report and being part of that process is really important. We want people to engage with us at Experian.
Yeah. Oh, that's a good point. And I know we talked about credit cards and how they are a good way to start off building credit, but what are some other ways to establish credit besides credit cards?
Well, you mentioned earlier, if you go to college, you may have student loans.
Mm-hmm.
That will do the trick.
Oh.
They will be reported, and you
Yes.
will have a credit report. I went that route too a long time ago.
Okay.
That's one option. The reality, though, is only about 17%, 20% of U.S. residents have student loans. We think, because we all go to college, I think we all have student loans.
Yeah.
But we don't all go to college, and we
Mm-hmm.
forget that. But if you don't have student loans, there are lots of other ways you can start credit. You could have a secured account with your bank or credit union where you put some money in savings and they issue a credit card that's then reported to Experian or the other bureaus in association with that account. That secured account, that savings account, secures the bank, not you. People confuse that. What that means is if you don't pay, the bank takes the money out of the savings account, but they still report the account late. So it's protecting the bank from loss, but it's a good way to start a credit history. You could have someone add you as an authorized user to an account, which means you have permission to use their account, but you're not responsible for the debt. It's very safe for you, but you're taking on a significant responsibility for that person who's adding you, because if you abuse that card, they get to pay the debt. So if someone offers to do that for you, understand the risk they're taking and the kindness they're extending, and be respectful of that. But you could be as authorized user. You could become a joint account holder. Someone could co-sign for you for a small loan. You might open an account with a retailer that's a small loan for a piece of furniture, something like that. Just be sure that the accounts are reported. Mm-hmm. They're reported to the credit bureaus that will establish a credit history, and you're off to the races. Then that's what you need to do.
Yeah. So after you've kind of established a credit card or you used your student loans or you were an authorized user to establish your credit, it's important to keep a high credit score, of course. So how can someone maintain their credit score to keep it on the higher good side?
So this may be the exception to everything in life, but having good credit scores and for banks, being dull, boring, and consistent is extremely sexy.
Yeah.
That's all they pay the bill on time,
Exactly.
keep the balance low, and do that over and over and over.
Mhm.
Spontaneity is not good with credit.
Yeah.
So keep your accounts paid on time. Make a small purchase to build scores and to keep scores. You need to show activity in the credit report. So if you have a credit card, for example, make a purchase every month or two, turn around and pay it in full. Scores need to see at least 6 consecutive months of activity
Mhm.
once that account's open for it to be included in the score calculation. Some can do it more quickly. Vantage Score, for example, in some cases can use an account after a month, but FICO generally says 3 to 6 months. So you need that activity. So even if you have an account, you need to use it periodically to make sure that activity's there or even though it's on the report, it may not be included in the score. So be active, but don't take on a lot of debt. Pay your balances in full if you can. The lower you keep the balances on your credit cards, especially, the better. And then apply for credit when you need it, but don't apply a lot. You don't need to, and most people don't apply for credit. Know when you need the credit. Don't just apply if you get an offer in the mail, for example.
Right. Exactly. Because you get
The
so many of those.
Yeah. Yeah, and the most powerful word in credit is no. I mean, just
Mhm.
just say no to those offers unless you find one that makes sense for you and you're shopping for credit. I use the pre-approved offers as a sort of a market expansion tool. If I watch them and then I shred them until if I need credit, I have them coming in.
Mhm.
If I see something that makes better sense, I get an incentive or a lower interest rate, I may apply.
Yeah.
Just depends on the situation.
Mhm. Yes. So on the flip side of having good credit, having poor credit is, it's common, and 43% of millennials actually have poor credit, and that'll hurt. We kind of talked about this earlier. Will hurt them making big purchases like buying a home and such. So how can a person with poor credit work to improve their credit score?
One, get your credit score, and two, get the risk factors to go with it. I think those are the first two steps. And three, get your credit report, and maybe get the credit report first and then the score. So I got the numbers in the wrong order. One, get the report. Two, get the score. Three, get the risk factors. But the risk factors that you get with a credit score tell you exactly what from your credit report most affected that score. There are hundreds of different credit scores. And so they can range wildly. I typically buy 4 or 5 scores a year just to check, just like anybody else would. And I can see as much as 150-point difference between the high score and the low score. Doesn't bother me because the scales are different, the things they're measuring are different. What it's important is that the numbers, despite the difference, mean the same thing. So get a number, kind of be consistent where you get the number. Get the risk factors because unlike the number, the risk factors can and are very consistent from one score to the next. So if you use those risk factors to tie back to your credit report, you can set a plan of action, focus on those factors, and all of your scores will get better. So get one score, get the risk factors, address those risk factors. That's going to help you build scores over time. And time is really the most important
Yeah.
issue. It's about consistency over time, not just where you are today. So once you make changes, give it time. It can take, depending on your situation, your scores might start to go up in a month. They might start to go, it might take, 2 or 3 months, maybe more, depending on the situation you have.
Yeah. Sometimes people might feel that they're kind of their credit is so bad and they can't make changes on their own. So if someone is struggling with debt and poor credit, what are resources available to get them back on the right track? If they feel like they can't do it alone, where can they kind of go to for help?
And you never feel like you're alone,
Okay.
and never
Yeah.
feel like you have a credit history you can't restore or that others haven't been there. I've been there. Everybody has.
Mhm.
When I got out of college, I did the same thing. I had one credit card, I was paying with another, so then I paid it with another, and got into that cycle like so many do, and worked my way out of it, and then got on at Experian and started learning what I should know. But very
Exactly.
fortunate in that way. But to get help, visit nfcc.org. That's we often recommend that, the National Foundation for Credit Counseling. They have great nonprofit credit counselors around the country in different member organizations. And they can offer non-emotional, non-biased, non-judgmental advice and guidance, and that can help you get started in the right direction. So seeking help and getting help is really important. Don't be afraid to ask for help. Don't be embarrassed about it. Don't be ashamed about it, because we're all in it or have been at some point, I think, unless you're very fortunate. Most of us have been through periods where we've had some challenges, and especially financial challenges, and pretty sure you know that.
Yeah. I mean, here at Navicore, we're one of the certified credit counseling companies, and we definitely find a lot of people there. It takes them a while to actually want to reach out to us for help, but when they do, they're so grateful for the help we provide them.
Yeah.
So what's some advice you would give some Gen Zers about credit? This generation is maybe just graduating college, just entering the workforce, just establishing credit. So what's kind of some advice you would give them?
Well, first, start small, and don't expect things to change right away. Be patient. I know when you're young, young too, you want everything tomorrow, right? Or right now. And
yes.
Eventually, understand it takes time, and so being patient. Get a small loan, get a credit card with a small credit limit. It's good to have one, maybe two credit cards, and to use them once a month. Pay them in full. Make a $10 purchase, but be consistent and be patient, and start early if you can. Get an account. You don't need a bunch. One or two credit cards will do just fine to help. Having a student loan can be a help if you pay it on time. And eventually you'll potentially have rent or something like Experian Boost. If you use that, if you're using a cell phone, that can help you improve those scores a bit more quickly. So take advantage of the tools that are available to you. Be consistent. Understand the difference between credit and debt. Understand the difference between needs and wants, which is probably the hardest thing of all. And be patient, because it will take time. It doesn't mean it's going to take decades. You can have very good scores in a matter of months or a year or two or three, but it will take a bit of time. So be patient. I think is the most important factor.
Yeah, that's the hardest thing to do sometimes. But I think you answered all my questions about credit. So thank you for being on the podcast today.
Great, Katie. Thank you for having me. It's always fun.
Establishing and building good credit is essential. As Rod said, starting off with a credit card is a great way to establish that credit. Charge your grocery shopping once a month to your card and pay it off in full at the end of the month. This lets creditors know you're using your credit and not carrying over any debt from month to month. If you do find yourself in credit card debt and with a bad credit score, you can reach out to us here at Navicore Solutions. We'll help you with a debt management plan that's right for you. Another great point that Rob brought up is that your student loans count towards your score. If you have student loans and you're making at least the minimum payment every month on them, you're helping yourself toward an excellent standing credit score. Keep on top of your payments and you'll be on your way to having terrific credit. So this concludes another episode of Millennial Debt Domination. Please subscribe or follow the podcast wherever you're currently listening. And if you're listening on Apple Podcasts, please rate and review us. That's all for now, Millennials, Gen Zers, and everyone else listening. I'll talk to you guys next time. Bye.